Today we're talking about the easiest ICT trading strategy. Here's a sneak peek of some of the incredible results that the exclusive members have achieved trading this exact system. But here's the thing, most traders overcomplicate their charts with way too many indicators. And they're looking at trading from every single order block and every single fair value gap. What you need is to understand a simple mechanical strategy and learn how you can trade it for yourself. I'm going to break down the strategy step by step. There are 4 steps in total. Make sure to stick around until the end of this video, where I'll guide you through a case study of a real trade that both myself and all of the exclusive members took trading this exact system. You're going to get so much value from this video. Let's dive in. This right here is the easiest ICT trading system, and this is formally known as the ICT Power of 3. What I've done is break it down into a simple, easy to follow framework, and I've broke it down into 4 simple steps. Step number 1 is, do you have a clear bias? Step number 2 is, are we during a kill zone? Step number 3 is, have we run buy side or sell side liquidity? And step number 4 is our confirmation. So now let me break this all down step by step. The first thing that you need to ask yourself when you turn up to the markets is, do you have a clear directional bias? If the answer is no and you're not sure what your bias is, then you should be doing absolutely nothing. Because when you're trading the ICT Power of 3, this is a system that we use in order to catch trend continuation plays. So therefore, we of course need trending conditions. So if the answer is yes, and we do have clear directional bias, we can start to gear ourselves up at looking at taking a potential trade. However, we still need to wait for the next confluence. These images right here just simply show a clear directional bias. So this image right here shows that we have a clear uptrending market. Therefore, our directional bias is to the upside, and therefore we would be only looking for long trades on this market. I remember when I first started trading over 7 years ago, I used to see a market like this, and for some reason I used to want to trade it counter trend. And I spent years and years of going around chasing my own tail, trying to time the perfect top and the perfect bottom. But then the paradigm literally shifted when I realized that you just make so much more money when you're trading with the trend, and the probability of your trade actually working out is so much higher. So please guys, make sure that you are trading with the trend. So this is an example of an uptrending market. To the right here, we have an example of a downtrending market. Clearly the market's making lower lows, lower highs, lower lows, lower highs, etc. etc. And therefore looking at potential short trades in the market when we have conditions like this is very, very favorable for you. And I know it sounds very, very cliche, and I know a lot of people say trade with the trend, but genuinely sticking with the trend, you will make so much more money. And so there are examples of, basic uptrends and downtrends. And if the market was simply just consolidating, then you would be doing absolutely nothing, which is this step right here. And don't worry, if you're thinking like, how do we identify a directional bias? I will reveal that to you just further in the video, so make sure to stick around. So step number 1 is incredible. And step number 1 is just ensuring that you have the basics nailed down. But if you do not understand step number 2, you will genuinely lose hundreds of thousands of dollars. And step number 2 is, are we during a kill zone? And this can primarily be broken down into 2 further buckets. For example, we have the London session, and this is between 3 a.m. and 5 a.m. UTC -5. That's New York time. And we also have the New York session, and this is between 8 a.m. and 10 a.m. And the reason why we trade the New York session and the London session is because this is when the most amount of volatility and volume comes into the market. But also because these are the sessions sessions that I can personally trade, and these are the sessions that actually revolve around my life. You know, because when I first started trading over 7 years ago, I remember vividly being sat there at 12 o'clock midnight, literally in my underwear. And I remember my partner saying to me, literally, what are you doing? And at the time, you know, I literally just thought it was normal. But then it all clicked because I realized that trading needs to revolve around my life rather than my life revolving around trading. You know, at the end of the day, you can trade the kill zones that are suitable for you, but please keep in mind that they should revolve around your life. And you know, yes, I do trade full time, but also what I found is these session kill zones are very suitable for people even with full-time jobs in education. And also these are literally only 2-hour windows. And therefore, you know, whether you want to sit down at one of these sessions or both of these sessions, I think it's very important to set a specific time window for that you can sit down and you can trade. Because what a lot of people do is, you know, they might execute a great trade during the New York session. They might execute another great trade during the London session, but then what happens? They get to the Asian session, they start over trading, they start trading a session that maybe they shouldn't be trading, and then they end up giving back a lot of the gains. And so when I sat down and stuck to these individual sessions, what I found for myself and all of my exclusive members is the win rate of our strategy increased dramatically. And therefore your win rate should also increase dramatically. Okay, so here's the logic behind the kill zones. If you're not during a kill zone, then what do? We do absolutely nothing. You know, a lot of traders find it very difficult to literally just sit on your hands. For me, I'm pretty much not even looking at the markets outside of the kill zone. And if the answer is yes, and we are during a kill zone, then again, we can start preparing ourselves to look for a potential trade. However, we still need to wait for the next confluence. And so the next step of the ICT power of 3 is, have we run buy side or sell side liquidity? If the answer is no, again, we do absolutely nothing. And let me just show you a buy and sell example. So if we are long bias, like this example right here, we're looking for a run of sell side liquidity. And this just shows the run of sell side liquidity right here. And this is running below the Asia session low. Because what this will be doing right here is stopping traders out, thinking that this is a breakout and enticing them short within the market. But because we trade the ICT power of 3, we just simply see this as a liquidity sweep. And this is just running the sell side liquidity before we get the expansion move to the upside. So it's our job as a trader to take part during the manipulation phase right here. And therefore we can look at capitalizing on the distribution phase. If we are looking for shorts on the market, you can see right here, we've run buy side liquidity. This is resting above the London session high. You can see this occurs during the New York kill zone. And again, this will be enticing traders thinking that this is a breakout and therefore inducing them long within the market. But because we trade the ICT power of 3, we see this as simple manipulation running the buy side liquidity. And therefore our job is to get an entry during the manipulation phase, and we can look at capitalizing on the distribution phase. So, you know, you always need to understand where is the buy side and sell side liquidity resting, but also you need to pair that with your directional bias. If you're looking for shorts, you need to see a run of buy side liquidity. If you're looking for longs, you need to see a run of sell side liquidity. And simply just reframing your mind and seeing the market in this framework will genuinely help you become consistently profitable. I remember when I first started trading over 7 years ago, I would used to see huge bearish candles like this. However, I didn't understand the context of the market in the fact that the directional bias was actually to the upside, and therefore it's actually more likely that this is just a liquidity sweep to grab orders to then continue to the upside. So it's very important to pair context with directional bias, and that is how you get a high probability A+ setup. So if the answer is yes, and we have run buy side or sell side liquidity, and we are during a kill zone, and we also have clear directional bias, then again we can continue to get ourselves ready for a trade. However, we still need to wait for the next confluence, and that leads us directly on to step number 4, which is our confirmation. Again, if the answer is no and we don't have a clear confirmation, we do absolutely nothing and we do not take any trades. If the answer is yes and we do have a clear confirmation, what do? We take the trade without any hesitation, and of course we use correct risk management. However, I hear you cry, what is the confirmation? And let me just share this with you right now. So, just so I can show you guys that I'm not actually cherry picking trades right here. This is the exact entry that was sent to all of my exclusive members, and the exact confirmation was simply a bearish candle, and the entry is on the break of the bearish candle low. Invalidation above the liquidity sweep, and simply target a 1 to 2 risk to reward. And so this right here is just showing live execution of this trade right here. And if we're looking for longs on this market, we need to see a bullish confirmation. Because I normally trade the 15-minute time frame, this is often a bullish 15-minute candle close. You can see that's what we get right here. Entry on the break of the bullish candle high, invalidation below the liquidity sweep, and again, simply targeting a mechanical 1 to 2. And again, this is just showing that I'm not actually cherry picking these trades. And this right here is just execution proof of this trade right here. I think this is very important because there's a lot of people out there that are cherry picking and they're not actually showing live execution proof. And I just want to show execution proof to, one, be very transparent with all of you guys. Also just to show you guys that this is literally my bread and butter. And this is literally the strategy that I'm trading every single day within the markets. And so that is the confirmation. That's step number 4. And of course, once we've took the trade, this is then the end of the process. And because I sort of adopt a more so set and forget style of trading, there's pretty much only 2 outcomes once I've took the trade, and that's that it's either a win or it's going to be a loss. It's very rare that I'm going to have a break-even trade. However, the only time that I really micromanage trades is if we have the likes of CPI or the likes of NFP, because these are both high volume news events that can create a lot of volatility within the market and which can create a lot of slippage and a lot of problems for anybody that's trading intraday. But as I said, primarily most of my trades will be either take profit or stop loss. And so this right here is literally the whole process that I follow every single day within the market. And we've just covered every single step in great detail. Just to recap the 4 steps of the power of 3. Step number 1 is, do we have a clear directional bias? Step number 2 is, are we during a kill zone? Step number 3 is, have we run buy side or sell side liquidity? And step number 4 is our confirmation. If and only if all of these processes line up, then I will take the trade without any hesitation, because all of the rules have then been met for me to take a trade. And then, if I'm looking at taking another potential trade in the market, this process needs to repeat over and over again in order for me to execute another trade using the ICT power of 3 strategy. Okay, so now that you understand the exact process that I follow every single day within the market, now I'm going to break down a case study of a real trade that both myself and all of the exclusive members took trading this exact system. Step number 1 is, do we have a clear directional bias? And even if we just zoom out right here, we can clearly see that the market is moving from bottom left to top right. So just in terms of a general macro perspective, we can clearly see that the momentum is moving to the upside on gold right here. And we are currently looking at the 15-minute time frame. And because I classify myself as more of a hybrid intraday trader, this is primarily where most of my analysis and execution will be based off of. However, it's one thing just looking at the macro perspective, but what you need to understand is a mechanical way to understand directional bias. The easiest way to do that is to apply this indicator right here. And you're going to have to hear me out, right? This is the EMA 20, 50, 100, and 200. It's the one by Dr. Sweets. Once you've added that to your chart, this top one is the 20. However, we don't need that. So now that you have applied that to your charts, we can simply use the EMAs as a directional bias. You know, we're not looking at taking entries directly off of the EMAs, but we are just using them as a objective way to understand, you know, are we looking for longs here or are we looking for shorts? So you can see right here, the 50 EMA is greater than the 100, which is greater than the 200. Therefore, this indicates we are long bias on this market. If the EMAs were the other way around, so the 50 was on the bottom, the 100 was in the middle, and the 200 was on the top, this would indicate a seller's market. And if the indicators were crossed over, this would indicate a consolidating market, and therefore we would have no directional bias. Okay, great. So I'm going to remove the EMAs, but please keep in the back of your mind that we are long bias on this market right here. You can see right here, currently we are during the New York Killzone, and therefore we can go to the next step in the process, which is step number 3. And because we are long bias, we need to identify sell side liquidity. We can simply do that by marking on the Asia session low. And therefore we're looking for price to come down, run this sell side liquidity, and then we can look for step number 4, which is our confirmation, and we can look for a potential long trade on this market to go with our directional bias. You can see we run the Asia sell side liquidity right here, and this is where so many traders go wrong. What this will be doing right here is enticing traders, thinking that this is a breakout and inducing them short within the market. However, we know that the directional bias is to the upside, and therefore it's more likely that this move is actually a run on liquidity in order to grab orders and to provide the fuel for institutions to actually move the market in the intended direction. It's really at this stage that we can classify this as an ICT power of 3, and our confirmation, if you can remember correctly, is to enter long on the break of the bullish candle high. Invalidation goes below the liquidity sweep, and we're simply targeting a 1 to 2 risk to reward. We're triggered long in this trade right here, and you can see during the after hours of the New York session, this trade hits take profit for a 1 to 2 risk to reward. You know, we're not looking for a home run here. We're just looking for a repeatable small 1 to 2 risk to reward out of the market. We can then bank that profit and then move on to the next trade. Another thing to note here is once we are triggered in, it's literally either take profit as hit or stop loss as hit. No micromanaging, no getting emotional. You know, you can actually see this trade went 50% towards the stop loss. And therefore, a lot of traders may have got emotional, closed this trade early, micromanaged, and then actually missed out on the profitable trade. Again, just in case anybody thinks that I'm cherry picking these examples, here is the exact analysis that was sent ahead of time to the exclusive community. Here is the actual entry of the trade, and here is the execution of this trade taken from my live FTMO dashboard. And you know, I remember over 7 years ago when I first started trading, I used to see retrace candles like this, and I used to get very emotional. I used to think about micromanaging or closing trades early when I seen price correcting. What you need to understand is price is never just going to go straight to your take profit. And so this trade was taken using this exact framework right here. And I guarantee if you implement this exact framework as well, that you will become consistently profitable. I think it's very important to be able to define your strategy into a process that is black and white. If you can't define, you know, if this happens, then do this, and if that happens, then do that, into a process with yes or no answers, then I really think that you will struggle to be consistent long term. When I adopted a framework just like this, when I started to see real consistency in my trading. And so if you adopt this framework as well, you also can see consistency. If you want to become funded and consistently profitable, then make sure to join my free Discord community. The link is in the description down below. However, if you do want results faster, then make sure to check out my exclusive community and one-on-one mentorship. The link is also in the description down below. But please note, this is only for extremely serious traders, so please bear that in mind. As always, thanks so much for your time and support, and you take care, guys. Bye-bye.